Hello, welcome once again to White Swan Finance, and today we are talking all things volume. We will be checking out the volume footprint, the volume profile, and understanding how you can use it in your order flow trading alongside a few trade ideas that you can implement for yourself. The software I use is by ATAS, and if you want to give them a go for free, there is a link in the description and you can use them for stocks, futures, and crypto. First, let's define what volume is. Volume represents the total number of shares or contracts traded during a given period, so the total participation. Remember, this is not how many individual trades took place, but the size of all the trades combined. Commonly, you will see it viewed like this, where the volume is at the bottom and showing us total volume traded per candle as per the timing of the chart you are using. So if this were a 5-minute chart, it shows the volume traded each 5 minutes. If it were a 30-minute, then of course it would represent the volume over a 30-minute period and so on. This can be useful to us, but there is a far better way to view volume, and that is volume at price, like this. In the previous video, I explained how a volume footprint is created, so I won't go over it again, but what it shows us is how much volume is traded at each price level. On charts like this, volume is usually color-coded to be darker at the higher volume areas. This helps us easily and quickly identify areas of interest. For example, if we see high volume at a specific price level, it could indicate a strong support or resistance area. Let's check out an example to show you what I mean. We are looking at the NYSE open on the ES contract. Just to remind you, I am 12 hours ahead of New York, therefore below you can see it says 9:30 p.m, but this is 9:30 a.m. in New York. On the opening 15-minute candle, we can see a build-up of volume here. Let's zoom in to make it clearer. So here is the build-up of volume during the opening 15 minutes, and what we can assume is that if we retest to this area, then buyers will look to defend their position. And as you can see, we do indeed retest this area and price uses it as support and we continue in our uptrend. You will notice again here that we create a volume cluster and once again, price uses it as support. The second entry is certainly not as good as the first, but it still could have provided a great scalp trade. Another way to view the volume footprint is like this, a profile. It's the same information as before, just displayed in a different way. So now, we don't just see volume as blocks of colors, but we see it displayed as a profile made up of nodes. A node is a basic unit of data, so in this case, we are viewing the volume at each price level. Therefore, each of these is a node. In a simple way, you are either looking for high volume nodes or low volume nodes. There is certainly more to it than that, but let's begin by only using high volume nodes and looking to use them as support or resistance. One final thing I hope you remember from the previous video is what this box shows us, which is the point of control. That is where most of the volume took place. Right, so let's take a look at one more example before we learn about profiles. Here is the 1 hour oil contract, and this here is the same chart. You can see a volume cluster and point of control very close to the current high of day. This would incline me to look short if price came back to this area. Of course, I would be looking for other information also from my footprint charts, but in this episode we are talking about volume, so let's stay focused on that. This is now a 5-minute chart of when we retraced back to our level, but let's zoom in and see how the volume looked. You can see volume being built up near our level. We have 3 points of control, all at the same price, 2 of which came one after another. This is a good indication that we are finding sellers here. Then we break above and into the zone that we drew earlier. We have a large volume coming through and the point of control is in the zone that we drew and we close lower. We could have then entered a trade with our stop above the point of control. This is a more conservative entry. An aggressive entry could have been placing a limit order at the start of our zone with a stop above the high of day. I don't recommend doing that unless you are also watching the bid-ask footprint and checking for a finished auction at the very least. Let's imagine we took our trade like this. How can we manage our trade and how can we find a good target? Well, there are many targets you can use. In this case, we could use VWAP, the low of day, or we could use the higher time frame to find the significant volume nodes. The same as how we found our entry. Which you use is up to you and dependent on other factors also. For example, a high to low of day move, though it's common enough, you will have far better win rate when using the VWAP as your target or scaling out of your position at other high volume nodes as price moves in your direction. Now, how can we manage our trade using the volume footprint? Well, unlike how many retail traders do and just move their stop up underneath each new candle, which is extremely stupid, we can instead trail our stop behind the high volume nodes that do actually act as support and resistance. If you're someone who likes to trail your stop, I think this is possibly one of the best ways you can do it. Here is one more quick visual example so that you can understand that. Next, we are going to take a deeper look into profiles. When we talk about the profile, we are referring to how the volume is distributed at each price level and the way it is distributed. There are three common profile shapes, which are P-shaped profiles, B-shaped profiles, and a capital D-shaped profile. There are more than this, but let's explore these three individually to understand them better. We will begin with the P-shaped profile. This profile appears when the majority of the volume occurs at the top of the session, forming a shape that resembles a letter P. It will have a narrow volume distribution at the bottom and widening towards the top. So what can this indicate to us? Well, commonly you will hear people say that the P-shaped profile is a reversal signal in an uptrend, but it's not as straightforward as that. Pay attention to its location within the broader market context. Is it occurring near the high of day or near another area of significance? Additional factors can provide more weight to the potential reversal signal. Confirm your analysis with other order flow techniques before taking a trade. B-shaped profiles are treated in the opposite way. We have a narrow distribution at the top and it expands towards the bottom. It can be a sign that the end of a downtrend is occurring, but again, context is key. It might be that sellers are still aggressive and we are about to continue our downtrend, like in this example here. Yes, we are at the low of day and we have a B-shaped profile, yet we continue down. So how could we avoid being trapped here? Well, check for volume levels on a higher time frame, and secondly, wait and see what price does. Don't be so eager to just get into a position. Now, if we were using volume alone, most likely we would indeed have taken a loss, but only by a few ticks. If we waited for this second candle to form, we would have 2 points of control at the same level. We have volume decreasing towards the low, which looks like this. And finally, we closed above the 2 points of controls, although not fully above the volume here. But if only being able to look at this volume chart, I would have most likely taken a long trade based on these three factors. Our stop would have been below the low of day, so we would have realized a loss on this position of roughly 5 to 6 ticks. Now, I hope you are already seeing the trade idea that we were provided with here by using this volume again, but now as resistance. Simply put, you could say this is a break and retest not only of the low of day, but of the high volume nodes also, which gives us much more confidence than a break and retest of price level alone. Here, if our target is low of day, we make 14 ticks, more than making up for our small loss earlier and taking us into profit. Finally, we will look at the D shape. This shows us a balanced profile with volume evenly distributed around the point of control. It is a sign that the market is balanced. Sometimes referred to as a neutral profile, they can be a sign to close part of your trade or to stay out of the market until a new trend forms. but you can also use the high volume nodes as support and resistance, like we have already been learning to do. So this would be our support and this would be our resistance. I prefer to put my stop limit the other side of the nodes as the volume begins to drop off. Some people prefer to put it the other side of the point of control. It just depends on your risk profile for that trade. Alright, there are two more things we are going to learn about, which are the value area and the session volume. We're going to begin with the value area, as this will lead into understanding the session volume. The value area in trading is the price range where most of the trading activity occurred during a specific period, typically covering 70% of the volume. Why 70%? Well, if we look at a bell curve distribution, the first standard deviation from the center would be the area in yellow. A standard deviation of 1 covers 68.26% of the data. If we round that to the nearest 10, we get 70%. So this is why we are using 70%. That is as far as I will go into that. If you want to learn more, just research bell curves and standard deviations and you can see it in more detail. For now, let's get back to our footprint chart and we can see how we can use the value area to our advantage. Back on our volume footprint, I will now show you the value area. This blue box on each candle is the value area where 70% of all the volume took place. There are a few ways that you can use candlestick value area in your trading, but right now we will focus on just one, and in a future video I will definitely show you more. So what we are going to do is combine the value area along with the high volume node reversal that we learned earlier. We can see here that we have a sharp price rejection, but that alone is not enough to base a trade off. So let's look further. I'm sure you are familiar with the engulfing pattern that forms on a candlestick chart, and in my very first video I showed you why that is a failed strategy to follow. So here is a much better version. This will be when the volume engulfs the previous candle's fair value. We can then use this as extra confirmation to take a trade here or here at the high volume nodes when price comes back to them, which you can see did indeed happen. Alternatively, you could enter a short upon the close of this candle with the engulfing volume and scalp out your position or aggressively trail your stop either behind the value areas or behind the high volume nodes. It isn't personally how I would have traded it, but it is still a valid trade idea, and in this example you would actually have closed out in profit. The final part we will look at today is the session profile, and by session profile we are commonly referring to the overall volume today. This is one that some people struggle with, given that it consistently changes throughout the day as more volume comes into the market. But like all order flow, if you practice reading it and using it, it will become a great tool to help you with both areas to enter and exit the market. When looking at the profile after the day is done, we treat it like every other profile, meaning we can see areas of support and resistance and different shaped profiles. Checking this before you start trading for the day can help you find some of the best areas to watch for. But now let's look intraday. When looking at our intraday volume, you will see we have the point of control, we have a value area high and a value area low. So inside of the high and low is where 70% of the volume has been traded so far today. But remember, this will update and change as the day progresses. So now we know what we are looking at, we can apply some simple lessons that we have already learned. Look here in this example. Price has come back down to our point of control and our value area low. We then have a D-shaped profile signaling that buyers and sellers are becoming balanced. Now, given that we can use value area low as support along with the point of control, we could have bought on this candle here as it appears we are rejecting the low, placed our stop below the high volume nodes, and then have a look where we could have targeted as our first target. I very much hope you are thinking here, where we have the point of control and high volume nodes. This doesn't have to be your full position target. You can use this to trim your position and then trail your stop, for example, but it's important to be realistic when setting your targets, especially if you are scalping. So you can use the value area high, the value area low, and the point of control as support and resistance and as targets for your trades. But remember to confirm your entries, as they don't always act as support and resistance, and sometimes price will go straight through them or not quite make it to them at all if you are using it as a target. So it's important you are paying attention and reading the order flow. One final pointer I want to give you is something that you can start experimenting with in order to find support and resistance zones on any market. For this, we are going to draw our own volume profile between 2 points that we choose. Of course, which 2 points are crucial? In this example, we are looking at the 1 hour DAX future. Shout out to my European traders. And let's look at this move here. We want to find an area that may act as support when price retraces. So we are going to draw our own volume profile that only looks at this move from start to finish. So how could we have known to look for price to bounce here? Well, let's draw out zones from our high volume nodes. Important to remember is when you draw your own profiles like this, do not use value area high or low, just focus on the volume nodes. So now we have some zones that we are interested in watching. Now we can look on a lower time frame as the price approaches these zones, and we can look for reversals there. Let's say you trade on the 5-minute chart. We can take a look and see if we would have found a trade. So the first time we test this zone, we bounce out, and the second time we bounce out again. Maybe you could have traded this based on volume alone and had entries and stops like this. Of course, you should be looking beyond just volume, at the bid and the ask, or even at the delta. I'm not saying you need to use all of them together, but I'm saying you should be combining at least 2, in my opinion. I know traders who use volume and bid-ask footprint. I know many who use volume and delta together. It really depends on what fits with you. There is a way that order flow trading will work for you. You just need to keep learning and practicing, because I promise you, it is far better to learn this than all the useless indicators and smart money rubbish that is out there. Yes, it may look confusing right now, but this is why I'm going to teach you each part separately, and then in the future we will start combining them and looking deeper into trades. Alright, that is it for this video. I will do a follow-on to this at a later date where we will go more into depth regarding high and low volume node breakouts, absorption, using the point of control, but this should serve as a good starting point for you to start analyzing the volume. So go check out some charts using the volume profile and the volume footprint, because once you start using them, I guarantee you will start seeing improvements in your trading. Thanks for watching. See you again next time.